Hello traders and welcome to another video review. Today is Thursday, January 15th, 2026. Let's take a look what do we have on the economic calendar for today. Asian session were almost non-event. As you can see here, we got plenty of data in the morning from the UK. GDP up from minus 0.1 to 0.3. Industrial production is better than expected. The manufacturing production up from 0.4 to 2.1, and GDP change up from 0 to 0.1. Trade balance and non-trade balance data better than expected, but this is not the issue. Here, what we are waiting for are the CPI data across the Eurozone, Sweden, France, Poland, Spain. Data are scheduled for release ahead between 9 and 10 o'clock. Then at 10 o'clock, we got ECB Economic Bulletin, and the Windows will give a speech as well. 30 minutes later, we got Credit Conditions Survey of Bank of England. And then we got the industrial production data and trade balance data from the Eurozone scheduled for release at 11 o'clock. Monthly GDP tracker from the UK scheduled for release at 1 o'clock. 30 minutes later, we got the publications of the monetary policy meeting account from the ECB. Import price index, export price index, New York Empire State Building, Philadelphia FX manufacturing index, and Philly Fed employment data together with the initial jobless claims. All of this batch of data hits the wires straight on 2:30 together with the manufacturing sales and wholesale sales from the Canada. FOMC member Bostic will give a speech at 5 minutes later. 10 minutes later at 2:45 we got S&P Global Manufacturing PMI data scheduled for release. At 10 o'clock we got tick net long-term transactions. Business PMI from the New Zealand is scheduled for release at 10:30. At the same time we got the last event of today. Fed's balance sheet is scheduled for release. So that's the situation for today. Quite busy day after quiet Asian session. So without any further ado, let's switch to the charts and we start with euro dollar. So the euro dollar for our time frame chart, after rejection from the technical line, which is the resistance level, and rejection from the trend line, is heading towards the low of the January 9th. That's the last week low. As you can see, momentum is still negative. The momentum supports the bearish outlook for the euro dollar. So right now we are looking at the euro dollar to breaking below 1.1619 and 1.1545. This is the latter is the next target for the euro dollar. British pound, except the minor moves, is still the same situation that it was yesterday and in the beginning of the week. Test of the internal supply zone, test of the internal demand zone, and we are back towards 1.342829. This is the daily candle. Very low volatility with the quite negative momentum, 45 points only, but very, very close to the neutral level. So despite the fact that plenty of data were published during the early London session, there is no reaction from the cable. So right now, please keep an eye on the situation on the cable, because we might see some movement anytime soon, especially if this movement will break out of the local consolidation. And the pullback comes from the for the US dollar, Japanese yen. As we noticed earlier, we have a bearish divergence and we have a very nice pullback towards the technical support as indicated, 158.20. So right now, what do we see here is a potential for trend resumption. Let me just place the 50 line on the RSI so you can see that we just bounced. We almost hit the level of 50, right? Almost hit it, and now the market is trying to bounce it. Of course, any breakout below 157.78 is more bearish than bullish. Sharp correction, sharp pullback towards the immediate technical support. Now the market is ready to move higher yet again. Gold market is still consolidating the recent gains. It doesn't want to move anywhere higher for now. And this churn, this consolidation range results in a movement, downside movement of the momentum down towards 56 points right now. Let me just move my all-time high in level a little bit higher, so let it go. Let's, for example, here 4,642 is the level. So as you can see, the market is right now consolidating the gains. It looks like 1, 2, maybe 1, 2, 3, 4, 5 wave is done. Then there's consolidation wave 4. Maybe one more wave to the upside is next. Nevertheless, please notice there is some kind of a bearish divergence, but the movement to the downside in form of the correction or a pullback is very, very limited on gold market right now. Well, in the background, the outlook remains bullish. S&P 500 moved lower from the 6,996 down towards the 100 periods moving average and the technical support. They prefer 6,886. Bulls, so they started to buy when the market hits this level. We broke back above the 100 periods moving average, and there is some sort of the indication that the market keeps moving higher after this correction was completed. But momentum wise, we are still at the level of 50 despite this very nice bounce. So right now, all we can do is to look at the background. In the background, we have the uptrend. Now this is the smallest correction. It's smallest than this one. It's smallest definitely than this time in price and time. So it looks like it is like a classical pullback, and the market might be ready to move higher very, very soon. Crude oil keeps moving up? No. The oil moved towards the level of 62 or 63, what it is, 62.35. Then very, very sharply reversed, almost hitting the current demand zone. It used to be supply zone. As you can see, it almost hit this level when the RSI and the momentum dropped from the extremely overbought conditions. So we are back below the red line again. So that was very nice movement, very nice try of a moving higher. Nevertheless, it didn't actually work that well. Quite strong movement to the downside on 4-hour time frame chart. From 62.35 to 59.20. That's a lot of volatility, and now the market is trying to bounce, but for now the upside is quite limited, and with this kind of momentum, it's almost highly unlikely that we will have the rally higher. I guess there will be some kind of a consolidation. The RSI will settle around the level of 50, and then we will see what will happen. For now, breakout out of the range, but no avail, no continuation, no indication that the market wants to go towards 65 or higher after this big supply candle on a 4-hour time frame chart. And last but not least, the Bitcoin, as expected, after the breakout above 94,789, we went straight up to 96,442, pulled back, tested the breakout, and then higher we go. 97,925 was the recent swing high made into the extremely overbought conditions, and then there is a clear and visible bearish divergence. But the next target for this market, let me just switch to daily. The next target for this market, which is the 98,000, let's say 98,940, has not been hit, but we hit 100 periods moving average on the daily time frame chart. That's important, and we hit the extremely overbought conditions. So the momentum is strong, momentum is positive. Now we need some kind of a pullback. We need to settle a little bit, to cool off a little bit. But those two candles here looks very promising for Bitcoin, and it looks like the market really wants to move higher these days after the correction or pullback is completed. So please keep an eye, especially on the thick red line, green line, of course, 96,760, because as from the technical point of view, we need to hold above this line to continue with this kind of a bullish momentum up towards the $99,000, $100,000 or even above. Please remember, any breakout above $100,000 might result in another let's say short squeeze continuation. So that's the situation on the Bitcoin. Looking good, looking bullish, especially after breakout out of the consolidation. So that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.